Morning, everybody, and welcome. It's TheoTRADE Chat. It's Don Kaufman here. It's bright and early. It's April 9th, 2024. SPOOs are up some 16 handles. I'm looking at it this morning. Yeah, they're up 16. Some of the rally, though, today, it's light and fluffy. It's a real flimsy rally, largely predicated, I believe, on the idea that the bonds are on a little bit of a bounce. We'll see how that actually plays out a little bit today. Dollar's actually backing off a little bit the last couple of trading sessions. So I just give you a little bit of a cautionary tale. So yes, the S&Ps are bid right now. Of course, everybody's looking at the marketplace and thinking to themselves, time out. It's a holding period, and nothing can happen until CPI. Nothing will happen until CPI. Oh my. The volume, though, it was so light yesterday in the S&Ps. We're doing about 173,000 contracts, but I'm going to tell you what's not light volume. The bonds again, it's catastrophically large volume. So we'll talk about this after the cash open, but this bond market, basically, if it starts to move, the S&Ps are going to react a little bit to it. So as I was saying, the S&Ps are up some 17 handles. Taking a look around some of the usual suspects, as I said, it's a real flimsy bid to the marketplace. The financials have a little bit of a bid by maybe 8 or 10 cents, which this is going to move, though, because there's no volume at all in here. None. Nothing. Like, when I say no volume, look at the pre-market, 16,000 shares trading the XLF. I wouldn't trust that as far as you can throw it. That's why I say it's a flimsy bid. In the XLE, there's nothing going on. But even in the big tech stocks, there's no size coming through. None. I mean, Apple, not even 500,000 shares here in the pre-market. Taking a look at Amazon, it's up like $2 on no size whatsoever. Microsoft, there's nothing. So you got to understand, without any size, you don't really know where we stand. Look at like Meta this morning, up a little bit. So anyway, the entire bid this morning is just a handful of tech stocks. But what's interesting this morning is Meta is not playing a significant role, okay? Nor is Nvidia. Nvidia and Meta have been out of the contest in the last few trading sessions. More about that after the cash open. So we're going to open with positive ticks. We're going to open with a relatively strong advanced decline line. But I have to tell you, I just don't have a lot of preconceived notions about what this is going to look like because there's such light volume into the session. And volatility isn't backing off at all. So we're bid. We'll see if this bid remains. Things could get a little bit more sketchy just moments after this cash open. Let us come to today's bell. So at the bell, again, looking for a strong advanced decline line, and that is exactly what we're getting. It's not full-blown correlation to the upside, but it's also it's not far from it. The ticks this morning out of the gate, positive 1,000, good, nothing to see here. Now, before we go any further, you're 30 seconds into a trading day. Do not be surprised to see this marketplace pull back a little bit. There's just, again, there's no size behind the pre-market. And it's very hard to substantiate moves in the pre-market when there's like zero size. If there was some fierce trade in the pre-market, around Meta, if there was some fierce trade, around Microsoft, I'd have a little bit more trust. But you're looking at the marketplace, in my opinion, just drifting a little higher. And that drift could stall out as real activity starts to come in. But again, also very, very important this morning, you can see, as I said, I don't be surprised to see this fade a little bit. And maybe we bid right back up. The expected move today in the SPX was at 2366. So we're almost there already in the SPX. And I also want to quantify once again, this is a big week. We'll look at that in much more detail, okay, in the next few minutes. We're 90 seconds into a trading day, but this is a $20 move to the upside. That means nothing against the larger expected move of the week. The larger expected move of the week is almost $90. So put in check again the marketplace. Again, my instinct in here, and it's more instinct than anything, says that we're going to pull back. And again, it's not a pullback predicated in any technicals, anything like that. Maybe a little bit of a pullback is just due to the fact that there's just not a lot to excite the marketplace at this point. Maybe it doesn't need a lot of it. I don't need a lot of excitement, but there was no size behind it. So I believe a lot of these products, okay, very undetermined bids and offers. By the way, energy sector, look at this thing. I mean, that is about as parabolic as a chart can get. That one is rather shocking at this point. I mean, look how many breaches of expected move. Okay, in the last few weeks, we've had huge breach, nothing here, huge breach, huge breach. Okay, pretty shocking, but again, fairly parabolic moves in the energy sector. Kind of like watching this one. I think that the energy sector is one of the more shocking areas because I keep focusing on it. Obviously, tomorrow's CPI report is going to be pretty critical. I think energy is going to have a lot to do with that. Anyway, taking a look back over at TIX and Nasdaq, I just wanted to bring up Nasdaq for a second. I made a statement in the pre-market, and let's quantify it. So Nvidia has not caught a bid in many days, even on days where the S&Ps, for example, okay, last Friday when the S&Ps were up 58, the Nvidia really wasn't much behind it. It was kind of in line with markets. Nvidia continues to slip, and you can see the S&Ps coming down a little bit. Meta, and we'll look at this a few times this morning. Meta is also seeing some sell side activity with Nvidia yesterday. Meta to a much lesser degree, and obviously today Meta's up about 1%. But this is worth noting. I'm not sure that Meta can rally if Nvidia starts to sell off. And that's one that you want to kind of, couple together in my mind, because if Meta starts to sink, which it is a little bit this morning, I mean, come on, it's only, 0.6%. I believe it's going to pull Meta back. They have traded 1-for-1 in a lot of sessions. I would also then counter and look at like something like Broadcom. Broadcom, which it has news today and has a bid under it. But if there's slippage early on in Nvidia, expect it to play out in Broadcom as well. So as I said to you, like, again, there's nothing behind the rally, nothing at all. And to look and see a pullback over here, it's absolutely of no surprise. Nvidia has been the mainstay of the marketplace. I wouldn't take the other side of what Nvidia's price action is saying regarding its implication to move the Nasdaq, meaning that if Nvidia is down, I think you should assume the Nasdaq's going to pull back. Yeah, there's going to be a conversation piece one day where Nvidia goes down and the Nasdaq goes up. I got it. It could be a big like rotation, but that's not playing out today. I mean, today there's also some news on Google. Google is bid, it's all-time high, right? You can look at the max chart over here, all-time high inside of the Google. This has to do, you'll never guess, it has to do with AI, okay? And their AI got them in trouble just a few weeks ago. Everybody has forgot about that, okay? There was the release of Bard, then they had that other crap, and then they had the AI that was creating pictures that was weird. Now they have AI video, which I'm sure also will be weird, but we're at all-time highs. Weird video. Anyway, let's not read into the tape all that much. Just to clarify here, let's go down to a 1 day, 1 minute. There's decent size in the first few minutes of trade. I'm surprised. Let's see if volume kind of continues in here. The trade activity is better than I would have expected for this morning. Much better than I would have expected, in fact. So there could be some trade opportunities as this day kind of progresses. I came in with maybe a little bit of a chip on my shoulder that today is fairly quiet. It's already produced a little bit more action than I had anticipated. I mean, look, the SPOOs were just up 20, then they were up 13. They've rallied back up again. Again, from this point forward, on the trading session, I think it's tough, again, for the marketplace to perpetuate gains if Nvidia really starts to come off. And you've got some real size trading in Nvidia, but it's too early to determine what that's going to look like throughout the course of the day. It's far too early. And one thing I want to point out in Nvidia, okay, yeah, it's a little bit of sell side activity, but that's it. Look at the options; they're just not trading any size. Okay, there's no size in the options here, so whatever this thing is doing right now, I wouldn't read deeply into it. We could rally right back up, which we possibly are right now. Kind of a funky start to a trading session here. Meanwhile, in Microsoft, I can make the same comment in Microsoft. We in Microsoft are not even into the thousands of contracts yet on puts. I mean, it's so light in the first 8 minutes here. Whatever, again, and I've mentioned this time and again, but whatever got the market here, okay, has completely dissipated. In previous slower trading sessions, previously meaning like pretty much all throughout the course of this year, in previous slow trading sessions, it didn't matter. Options volume was just rushing in and buying calls, and the marketplace would continue to perpetuate itself to the upside. You're not seeing that right now, not at all. It completely evaporated, right? You can make every argument that you want for Google being at an all-time high over here. The one thing that's really strange, it's just not being done much in the back of options. There's some call buying going on in here, but it's a completely different trade than it was just a few weeks ago. And there's evidence all over the place. But Nvidia today could get interesting because it looks like it's going to face back to this 850 level. Nevertheless, we assume that Nvidia volatility is dead, and I think that that's probably an effective statement that volatility, it's died off. Okay. Nevertheless, okay, you can't discount the ability for this volatility to come raging back exactly like it did here and exactly like it did here. So we've all seen this movie before, and consequently, you're going to see Nvidia's volatility start to uptick. Why? Because there's earnings, and the volatility that is being measured here on thinkorswim, that volatility is 30-day vol. So this line of volatility, okay, is what we term 30-day vol. This is not like really like short-term vol. It's not 9-day vol. This is a 30-day volatility construct. Basically, what it does is the platform averages to 30-day volatility. The volatility that's being charted on thinkorswim is the implied volatility right here. This 44.15. That's technically what's, if you pull up a standard, this is not a standard implied volatility chart, but if you were to pull up a standard, we go into volatility studies. He goes to volatility. He goes to implied volatility. He shoots, he scores. Look, 44.15. As I was saying, the crap I was using looks the same. It goes up and goes down, it goes up. I just wanted to show you that implied volatility can be dead in Nvidia, and you can basically say anything you want to say, but it can come raging back, and it could come raging back because the earnings are coming. Yeah, I like what Photo Guy asked a question. Okay, allow me to repeat the question. The question is, if they aren't trading Nvidia, where did the lemmings go? First of all, the lemmings are nothing more than It's like proprietary trading firms, algorithms. They're trading like a dispersion trade, right? And as soon as the dispersion trade don't work no more, they sit there and they go, bye, bye, and they just wave as you drive by. Okay. The dispersion trade is not working anymore. How do you know that? Well, because the dispersion trade is basically going out there, just bear with me, and selling. Here, I'll use spiders. They sell boatloads of premium, like something like spiders, and they take all the money. Like if you sold $1 million of premium for zero DTE today, you sell $1 million worth of premium. You go, and you sell it naked. How can you lose money if a big move happens? But if a big move happens, they're taking every ounce of that $1 million and they're dumping it into buying options in Nvidia. So long as Nvidia moves more on a percentage basis, and so long as they don't overpay for the implied volatility in Nvidia, they can make money in this dispersion trade. That's kind of the easiest way to explain it. But it's more complicated than that because the implied volatility of Nvidia can be like 3 or 4 times that of S&P. But as soon as Nvidia implied volatility, okay, or I should say also historical volatility, price action, as soon as price action dries up in Nvidia, they're not going to do that anymore. Because then at that point, you only have to get burned once or twice in dispersion. It hurts, really hurts, because you're selling all this SPX stuff, okay, and you're taking all that premium and buying in Nvidia. Nvidia doesn't really move, and then the SPX does move. Oh boy, can you get screwed. And if you look at a day like last Thursday, where this big sell-off, it was a precipitous sell-off. Anyway, we had this big sell-off last Thursday, right? We're in Nvidia. Oh, it was a little bit of sell-off, but the point I'm trying to make on a percentage basis, they got freaking rocked, okay? Because the spiders and the SPX got rocked, and that makes everybody go, I go bye bye. So you start getting an inversion where initially you're selling premium in the SPX, and all the equity products move big. All of a sudden, the index product comes to life, like the SPX starts to move big, and everything else just moves in line with it. And that's one of the reasons I don't think I ever described exactly like this, but it's one of the reasons I look for correlation. Because once we start to correlate, no one gives two beeps about Nvidia. Nvidia don't matter no more. They're all going to worry about the S&Ps. So their trade doesn't work anymore. Does that make sense? Okay. Okay. Does that make sense, photo guy, for where the lemmings have gone? The lemmings. Okay. I used to play that Lemmings game back in college. It was great. It's a great game. Anyway, the S&Ps continue to kind of, there's slippage in here. Look at the financials. Now, I'll remind you, in the pre-market, how many shares did this thing trade? Huh? How many? There were 16,000 shares trading, 16,285 shares that had traded in the pre-market. Okay. Now there's 1.6. At 1.6 million, someone does give a damn, right? Clearly, at 16,285, nobody gives a damn. The point that I'm trying to make is I told you not to trust that bid to the marketplace. Okay. I didn't know we were going to sell off. All I knew, okay, is that there was no size behind an up move in markets. And there's no reasoning behind that size either. Like there's just behind not only the lack of size, but there's no reasoning behind the move. We just kind of drifted a little bit higher and we're corrective activity. There you go. Anyway, so okay. By the way, Steve P was saying in your dispersion example, okay, SPY premium sold as call options. No, trading firms will sell call options, put options, but you have to realize everything these trading firms are doing, they're using algorithms to hedge off their delta too. They don't take any risk. I shouldn't say that. They don't take directional risk. Where the trading firms get annihilated is in premium. So if you go out there and you sell, this massive straddle or strangle, let's say they sell both sides of the marketplace. They sell a massive straddle or strangle. Obviously if you sell the strangle, you don't want the S&Ps to move. Meanwhile, you take all that and dump it into call buying on Nvidia, you got yourself some problems, obviously. Number one, what if the S&Ps do move big? Your short straddle you would think would get killed, but it won't because they'll actually hedge it with like, minis and micros, and they'll hedge some of the directional risk. Where they really can get killed though in these trading firms is when they're buying premium. Like somebody's always left buying premium, and you buy premium and the marketplace stalls out. Like days like today, if you're caught long options, you're dead. So that is hard to lay off the risk at times. You know, as a trading firm, you can lay off a risk pretty easily of directional risk because you just buy or sell S&P futures. Hope that makes sense. Like, but the risk we're talking about is delta. That does not look like a delta. Damn it. It's a good day to actually talk about this because it's sloptastic out there. So you got delta risk as a trading firm, plus or minus delta risk. Okay. And that is delta. Okay. So that's delta risk. That's easy to lay off. Doesn't matter where it is. Your delta could be negative, 1,000 SPY deltas. You go out and you buy two of those little monkeys, you buy two of those, and it makes your delta totally flat, right? So two of these, okay, two S&P futures is each one of those is 500 shares of SPY. If you buy two of them, you're buying a long 1,000 delta. So it's really easy to offset your directional risk. Okay, so you have directional risk, and then you have your gamma risk. So you've got your delta risk, you've got your gamma risk. Gamma is just basically the second derivative of delta. And it's really easy to figure that out because gamma is what's coming to your delta, coming to a theater near you. So you have this algorithm that's in real time hedging the delta, but you have another, electronic eye that's watching gamma and knows what the new delta is going to be. So if you know what the new delta is going to be, they're preemptively like looking at, mitigation of that risk. The ones that get kind of wild though are going to be theta. That's supposed to be a theta. Okay. It's supposed to be, I can't draw. God. Yeah. Anyway, theta. And then we have Vega, right? Okay. Do we know the symbol for Vega? And we'll draw a middle finger for you right there. Anyway, I'm at Don's getting angry. Anyway, theta and Vega can actually be challenging because these are really kind of joined at the hip. If volatility moves up, can really screw you if you're negative theta and positive theta, or should I say, volatility moves up and you're positive theta, that can really hurt. Those risks become a little bit more complex to mitigate, right? Okay. You can draw it like this, okay? Or yeah, I can't draw it. Okay. Eric, it's a new gamma symbol. Okay. I can't do it. I can't do it. There. It's like sideways at this point. Just messing with you. Anyway, it's look, S&Ps right now are almost massively unchanged. A little bit of a pullback today. Interestingly enough, there's real volume into this sell side activity right now. Real volume. This is some big size over here. So, so there's not enough coffee. It's, earlier in the week, I have problems. Okay. I got problems earlier in the week. So for those of you that don't know, I am working in my office here. I'm in Arizona. I'm still in Arizona. I got to get the hell out of here. I have got to get out of Arizona. I've had enough. I'm ready to go back to the island, but I can't because the house here has to be rebuilt, and I'm still literally still fighting with like insurance. It's been 3 months, but I work out of the guest house of the house that flooded, but I'm living in a rental that's like 3 miles away. Okay. I have to get up at a ridiculously early hour to get here. But to complicate things this week, okay, I'm right in the heart of Paradise Valley. And this week, I don't know what they're doing, but they're doing road construction in this area. And they shut down the roads. I had to leave at like 4:30. I had to get up at 4:30, leave at like 5 o'clock. It normally takes me maybe 4 minutes from the rental to get here. By the way, it's a horrible commute, I tell you. But this morning it took like 25 minutes because they shut all the roads into the house over here. It's quite challenging. Okay. I've been having problems ever since. Okay. I'm just driving around in the dark and I'm like, how the hell am I going to get there? And I know this area really well. Okay. And they had every street kind of closed off. It was an interesting morning. I felt like I was playing like Frogger a little bit this morning. But there's no, you can't screw around here either. Like there was police everywhere apparently all night in the area blocking the roads off. I still don't know what they're doing. I'm actually going to walk out there later. They've warned for like a month that they were going to do this. They're doing it. So figure out a better way to get here. Okay. Yeah, Terrell, it's I'll be lucky if this house is ready by December. I have officially everybody's coming over and signing today. So if you the rebuild costs are incredible. Absolutely incredible. So you want to talk to me about inflation right now? You have no idea. No idea. The rebuild costs, and of course, insurance right now is not giving me anything. So I just got to start rebuilding it. Yeah, pay to insurance for what, 25 years? What are they giving me? Absolutely nothing. Okay. Oh, funny. Somebody actually lives right off there. Yeah. So, Dawn, I am right down the street from you. I am literally right down the street from you. I am right on the edge of Mummy Mountain. Okay, just past DoubleTree. So as you drive up that Invagordon or 64th or whatever, literally right in there, man. Not that anybody has any idea where I'm talking about over here, but you can't get through. I've wandered through. I had to actually go back out all the way around. It's fun stuff. Larry, the house flooded here. The a pipe broke. Yeah, it was not good. Broken pipe. Okay. It is nice, but Dawn, I'm getting the hell out of here. And as it starts to turn into a hot summer. So my wife actually really loves this area too. Ticks have actually flipped over. The advanced decline line is almost exactly inverse. Okay. I often say this, but like kind of let it happen, because what's interesting about today's little reversal, which again, this morning is kind of what I was looking for. By the way, first of all, I'm not convinced that we're going to necessarily go down today from here. I just thought we would end up meandering again right in this area. So obviously the force is strong with 52.50. If you have not looked at trade, this is a 30-day. This is 30-day, 1 hour. When I say that the force is strong with 52, 56, okay, we're right in this neighborhood here. Right in this neighborhood here. Okay. Oh, cool. There's a lot of people here from Arizona. Okay. Yeah, there's more coffee. It's mine. It's mine. Okay. Um, hmm. um, Sorry, I'm just reading over here. Huh. Thank you very much, Dawn. I know the construction was supposed to start. Actually, when I left here yesterday, there was people, but this morning the police stopped me. Okay, we're on a first name basis. No, actually, the police. I really do know most of them, but everybody here works out at the same area. All the police, all the police. But I couldn't get through, man. Anyway, S&Ps, as I was saying a moment ago, I'm kind of anticipated them to pull back. I don't have a great feel from here. And what I'm looking around at right now, and I am like looking around, I can see that the financials have pulled back a little bit. I don't see any continuation per se of sell side in there. What I do see though, volatility kind of pumping back into the marketplace, and the volatility makes sense. Okay, a lot of people are thinking volatility should remain high, and the reason you're thinking that is because CPI is coming tomorrow. But there is something that is really important to understand about VIX. VIX only sees vol 30 days out. If you're worried about CPI tomorrow, you got to look at like 9-day VIX and so forth, or even less than that. Like the shortest term volatility that you can look at is looking at the SPX itself. Okay. And in the SPX itself, like, look, tomorrow there's a $50 expected move packed in. Interestingly enough, there's still $21 of expected move packed in today. In any regard, as I'm looking at this and I see volatility kind of pumping in, it is like a little bit ominous, but the bonds have rallied a little bit today. I would think that the bonds being bid would actually support the marketplace to some degree, but it doesn't seem to be doing that. Moreover, the dollar's seen some sell side activity. Okay, again, I don't trust this marketplace as far as you can throw it. And one of the reasons I don't trust it, I brought this up extensively yesterday. The gold, unstoppable at this point, but it's not just gold. I mean, look at basically every metal and most commodities out there. Okay. Uh, Copper. I don't know if you guys ever look at this stuff, but like copper, holy crap. I mean, copper is out of control to the upside. We've all seen higher copper than this. But the interesting thing is, we obviously the reason I'm looking at this is inflation. Okay, so copper is actually ripping. It's not as high as it once was, but right back here is the absolute peak of inflation. It is. Okay, I mean, that is a plateau of inflation over here. It finally came off. We're ripping again. And I believe that copper is probably going to break back out to the upside. But the metals right now, by the way, I can't pull up coffee futures. Damn it. Coffee futures are intercontinental. It's basically it's an exchange that you have to pay for their quotes, which pisses everybody off. So nobody actually buys their quotes. Okay. Cattle futures. I'm just kidding. Cattle futures have actually come down, but most of your metals are absolutely ripping. Okay. Most of the commodities are ripping, even coffee futures. The reason I wanted to show you that, you can look at coffee futures in delayed quotes. Okay. By the way, there's micro copper futures too. If you're interested in that, there's micro everything. I did look over at like natural gas, which is down quite considerably. Okay. And again, this is a 9 month, but the metals, it's intimidating. And it's intimidating because you want to come up with all these like reasons for the rally. By the way, here we have none other than platinum. Look on a 5 year. Platinum's really close to breaking out. I assume it will. Okay. The metals, in my opinion, though, that matter are very inflationary at this point in time. Okay. And I'm not sure that the CPI print is already expected, okay, to come out fairly hot. If you guys missed this on the calendar, you go tomorrow and you look at like that CPI print, okay, click directly on it. It's kind of hard to see, but the CPI print is already expected. Like, look, 3.5% is expected. So there's already a critical uptick. Like it's expected to be 3.5%. And a lot of people don't, and X food and energy is even, it's hot. I mean, it's, 3.7%. Nevertheless, the point that I'm trying to make is if CPI were to come out above that, I think it's catastrophic. But to me, they've pegged this so freaking high. That's going to be hard to top. But I don't know. The metals see it. This is in no uncertain terms. I am not saying that you should buy gold before CPI. I'm not saying that because I'm going to tell you, if CPI comes out as expected, which is already the bar is set so high, but if we come out as expected, gold might get crushed back. I mean, considerably crushed back. This is going to be a fairly tumultuous trading week. It might not feel like it right now, but behold, we're right on the edge of it's going to be some pretty big news. Speaking of big news, deviating once again, I'm looking into the corner of my eye over here and I'm seeing Nvidia looks like it's going to crack lows. There's still good size trading in here. Here's the question in Nvidia. And by the way, Nvidia on a day like this, it's important because now it is down 1% and it is dragging the Nasdaq with it. I mean, look, every other monster of tech, Netflix doesn't count. Netflix isn't a monster. Netflix isn't even a little beast. Okay. Every one of the other major players is higher today, not considerably higher. Google is, and yet the Nasdaq cannot really sustain much of itself. And Nvidia is only down 1%. The reason that I keep deviating and I'll go to Nvidia is options volume starting to pick up. And I don't mean pick up on the positive side. I mean, are we coming out and starting to buy puts and starting to force the product down in a squeeze, which people think of a short squeeze, which is to the upside. This is a gamma squeeze, where gamma squeeze can be both bullish or bearish, and the gamma squeeze to the downside. I don't see a lot of activity in here. There's definitely some push trading, but when this thing really starts to push, you should see these puts traded at the ask or above start to rage. And there could be nothing more simplistic than looking just at like puts traded at the ask or above. Boom! Because the algorithms that are going after this, they just go take it, take it, take it, take it, take it, and they're just trading at the ask or above. They're just sweeping through the marketplace, taking up all the liquidity at the ask or above. And the more they do that, okay, the lower the product will go. If you start buying puts at what somebody's asking, okay, that gets crazy in a hurry because you're buying negative delta. Okay, that's positive delta to the market makers. Positive delta to the market makers forces them to actually have to sell stock. I do not see big evidence of that. Maybe minuscule at this point. Like this number right here should be jumping if they were buying puts. I mean, jumping. You know, a couple hundred contracts every few seconds. It's not. It's not. But the day is young. The day is young, and it's worth seeing something and noting something that's so transparent like that. Meanwhile, Meta is still kind of holding it together. Okay. I assume Meta is actually going to continue to slip. I would assume that Meta is going to go negative today. Prognosis negative. Meanwhile, Tesla, which was off this morning, has a wild and woolly bid back under it. They like me. Tesla has a bid back under it. By the way, there's a position in here for Catapult. It is it's performing well right now. It's up about 55%, but that position is still very, very new. Speaking of which, just sifting through some inventory. Okay, we've got some Catapult inventory on in the MES. You know, I'm going to show you guys something really unusual in the MES. So I sold premium. I sold put premium and I sold call premium in the MES. This is for apparently it's Catapult. I don't know what happened to the L. I'm all over the place. Gamma symbols upside down, catapults. Okay. Catapult. Okay. Oh, work. Make it work. Yay. I got to get out more often. All right. As I was saying in the MES, I sold premium in here. In fact, when did I sell premium? Just to display this, because I find it interesting. Okay. I sold premium all the way back here on March 22nd. I sold the call premium here on March 15th. And you look, both of them are down. How's that even plausible? I'll tell you, it's because volatility went up. So we are one volatility sensitive animal right now. These will come out, but volatility, either the market has to move or volatility has to collapse. It's a really wild little scenario, but the S&Ps, they stalled out. And by the way, if you saw the date that I sold there, 315, which is right in this neighborhood here, and then 322, which is right in this neighborhood here. The S&Ps have basically stalled out in this neighborhood, but vol has actually gone up, and I'm feeling the effects of volatility. Okay. Catapult. So anyway, the catapults, the equity side of the trade is working really well right now, but the premium has to come out. And this is, I'm serious when I say this is definitely some cause for concern. I'm not big in VIX. I look at VIX, I look at VVIX, and the VVIX came back down. All of your volatility indicators right now, okay, point to something's up. Now, time out. You recognize that tomorrow CPI could come out and the market rallies and the volatility crushes back down, right? And that's plausible. But the volatility that's up is 30 days out, and the CPI shouldn't have much of an effect. The market right now is longer term nervous, okay? And I can say that and substantiate it with a 3-month VIX. The 3-month VIX, this is here. Well, I'll zoom in. Right now, this is where we're trading. Okay, we haven't broken out completely, but we're basically at the highest volatility that we have seen since the rally began in early November of 23. It's an interesting way to look at it, right? So it's the highest volatility, and the volatility structure is such that this is the most risk we've seen, and yet you're still not seeing, like, has the market really sold off at all? Absolutely not. This is not a sell-off. We're basically, one trading session away from all-time high. In fact, if you look at the SPX, you look at the expected move. You see that the upper edge of the expected move, okay, denotes that that would be the high, an all-time high. So you're hop, skipping, and jump from the high, but there's clearly some risks on the horizon that the marketplace interprets as, well, big. That's a big takeaway. Okay, gotta put. So kaput. I like it. Sorry, I'm just watching Tesla. Tesla's got a rip in it. Yeah, by the way, somebody's mentioned, and there was a settled lawsuit in Tesla. Though most of that happened and most of that was out in pre-market, that was actually the rally over here. So what causes, and again, what people think causes moves and what really causes moves, two totally different worlds. What's causing the move in Tesla? There are some call buyers in Tesla. There's no question. There's 40,000 more calls trading at the Oscar above. Okay. It's, without unequivocation. By the way, speaking of, I was talking about Meta breaking through and selling off. There you go. So that thing was up 70 cents the last time we looked at it. It's now down $1.78. Meta and Nvidia are starting to take hits. Any further than this, you're going to see the Nasdaq go negative on the day. Prognosis negative. I want to sit here and I want to fire off some trades today, but I'm shopping like in-out spreads. I don't want to get my head completely taken off. By the way, everybody I hope is out of the Boeing trade. Boeing trade worked. There was 10 days left to expiration. We were the 90-day 87 over here. It's trading for like $2 right now. We exited that profitably. I do hope that everybody is out of it. There's no reason to be in it anymore. It is almost fully profitable. I mean, it's $2 on a 250 wide spread, so you should have been out well prior to that. Okay. I do not have a back ratio in Tesla. The only thing that I have on in Tesla right now is a bullish call spread for Catapult. That's all that I have on in Tesla. Okay. Shopping around in other accounts, I still have a Boeing spread on that's bearish. This is again some Catapult stuff. I don't really have any other directional. I have some premium selling accounts, but nothing directional. On the premium selling, okay, it's not that it's not good, it's not bad, it's nothing. The premium selling right now is it's basically flat. So market stayed flat, volatility went up. We are, in a holding pattern until obviously some of the CPI comes out. See how that goes. Speaking of how that goes, a little bit more of a breakdown, I think, is coming inside of the financials today. So we're actually getting the rumblings of a little bit of volatility through here, which again, I'm surprised because those bond markets are higher. Speaking of which, let's go into some specifics today. First, in the S&Ps, okay, I mentioned this in early trade, but I just kind of glossed over it. Right now, okay, the week is unchanged. So right now, the week is literally unchanged. We're plus or minus, okay, what was it, 88.79? That's my expected move, 88.79. That's the entire week. Okay. That's one of the bigger expected moves we've seen lately. Great, whatever. You had to come back a couple of weeks to have seen something that significant. Today, the daily expected move today is, was it 23.66? So your 23.66 for daily expected move in here, which right now, basically unchanged. I think you can make an argument that we came pretty close to it though. So we rallied up, you're up $20 So we basically tag the upper edge of that daily expected move and reverted off of it. Okay. I wouldn't have a lot of chip on your shoulder right now. I can tell just by, reading chat, people like the rally this, the rally that. The rally has not, okay, been here now for how many weeks? The last week that we actually broke the upper edge of an expected move is right back here. Okay. Pulled back off of it. You're about 2.5 weeks into some type of a stall. We haven't seen any inklings of squeezes going on, other than you can see today inside of Tesla. It's all call buying activity driving. Look at this. This is what I'm talking about with squeezes. Look, the volume is jumping. This is an algorithm that's just sweeping, 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 sweeping. Okay. They'll grab everything they possibly can. Just watch that for a couple of seconds and you'll see exactly what I mean. You do not see that in Nvidia. In Nvidia, look at the put volume. Okay. If they're going to come in here and they're going to cause some havoc, I'm actually going to highlight for a second. I want you to watch it. They're going to cause some havoc to Nvidia. Today ain't the day. I mean, they could come rushing in later, but this put volume would be jumping, okay, inordinately. And there's definitely some put volume in here, but if you compare that to Tesla, Tesla's being full on attacked, in terms of call buying, and that's just going to perpetuate a bit of an up move. And if you look on a percentage basis, Tesla, of course, is up 3%. But as fast as they come into Tesla, that trade could dissipate, and all of a sudden we start selling into, or I should say, buying puts in Nvidia. Okay, right now Nvidia, there's some contract size coming through here, but it's just nominal. So these are tough trading sessions, where this is a kind of trading session where I'll spend time looking around, and I'll spend time like, look, not a lot of people are going to catch that calls, okay, are just being gobbled up at any price in here, right? Literally at any price. Suffice to say, if I looked at implied volatility in here, implied volatility would be going up with the stock going up, and you're seeing exactly that. Now, granted, there's also earnings right around the corner. Take this to an intraday. How come I can't do that on an intraday? I want to take this. I want to come 1 day, 1 minute. Son of a. Okay, I'll have to work on that one. I guess I have to put up studies, implied vol. I can use standard implied volatility. Here you go. That is perfect to display it. Implied volatility is rocking up with the stock going up. Okay, how's it plausible? Because you can see the trade is just coming in here. They're trying to do this dispersion trade expressly inside of Tesla. Look, traders will do anything that works. Okay, it's like the theater of whatever's working right now is what they're going to play, on that screen. And what's working right now, just keep forcing order flow into Tesla till it doesn't work no more. Meanwhile, whatever was going on in Nvidia is dead. And I caution that they're going to do the opposite in Nvidia. All of a sudden, people realize I can do this to the downside. And Nvidia is only down 1.5%. But the reason it matters is it's at a critical level at this point. Like, let's just round it to 850. It starts cracking through 850. Things are going to get real, and they're going to get real in a hurry. Okay. It's there's just nothing to go on the screen other than order flow, minute to minute. So we've got the S&Ps that have stalled out over the last 2.5 weeks. This does not necessarily mean that a rally is done. Done for right now. It does not mean the rally is done. Okay, there is definitely a pretty humble pause in the marketplace, but tomorrow's numbers it's a catalyst. Like, by the way, the CPI numbers, okay, it's just another match being thrown into a pool of gasoline. I wouldn't read into it as anything more than just that, right? But you got to kind of keep, a bit of risk on the sidelines at a time like this, where you don't want to push too many chips in there based on a catalyst that could rock the marketplace. And all you do know right now, and there's things that you know and things you don't know. What you do know is almost a $90 expected move. This is the biggest risk we've taken in weeks, right, in the market. There's some bigger moves back here, like those are some decent sized moves, but this is a $90 expected move, and it's real, and it's going to get a little crazy out there for the next few days. I always caution people, though, that the big moves, okay, you can actually see markets moving prior to, and that's specifically because there's hedging activity that happens before some of the big moves. Anyway, onward in here. By the way, I wanted to bring up Cat for a second. Cat to me is a lovely shot at what could be a bearish catapult. Right there is a problem for me. I can't, in my opinion, cannot do a trade in the near term because the earnings are coming. By the way, catapult would work. You can carry a catapult right through earnings, but what I'm getting at is an in-out spread. Okay. I would love to take a trade in here, but I mean, I don't want to take a trade at in-out spread for 10 days. That's just, to me, it's going to be a little too short in terms of time frame. Caterpillar, though, is an interesting candidate. It has been straight up, and if and when it does pull back, it could be quite the spectacular pullback. I mean, for those of you that do not know some of the history of Caterpillar, pull up like the last 5 years. In fact, I'll even come back more than that. I have traded Caterpillar extensively, okay, here at TheoTRADE. I've had positions dating all the way back to right here in 2018, where we shorted it, finally covered it. I mean, this was a wild, wild position that I rode down, added to size, rode down even further, closed it at basically $100, re-up some of the short in this, re-up some short in here. Look where we are. I eventually got a little beaten up, closed like half the position out here. I'm still in a rather mild position. How this thing has gotten so wild to the upside. Again, this is an interesting candidate for, if you will, a longer duration position, okay, an investment to the downside, if you will, okay. Historically speaking, you are seeing one of the biggest moves, okay, in a product that, again, typically historically has not made anywhere near these types of moves. So Caterpillar, I mean, look, you had a $200 product last year that's almost to 400. It's almost 100% move to the upside on a year-to-date basis, still up 27%. I think it could be a great opportunity, though, in Catapult. This is one, though, I was pricing it a little bit earlier today, and you got to take a quick glance over here with me. Probably somewhere out here. There's no choice, though, but to trade. It's $10 wide strikes. So you're trading for 250, okay? 250 debit in here, but I'm 100 days out. It's 100 days out, which is big. You can go 73 days out and go right after the same style of trade, okay? It's going to cost, though, about the same. So half dozen this way, half dozen the other way. It doesn't make a difference. The risk isn't here is what? You're wrong. So you would have to go out and pay $255 for this. You finance it. You finance it by selling, X number of puts against it. And even if the market tanks, Caterpillar is going to tank with it. Caterpillar would produce, okay, quite the return over here of about, you can make like $6-7 on this trade. Like again, I think it's a great shot. Anyway, so Mark was saying, I know you don't care, okay, but a better question: who's buying Caterpillar and why? One of the things that I often preface: no one has to buy the stock for it to go up anymore. Okay. And I know that blows people's minds when I say that. But first of all, I am going to say this about Caterpillar. Okay. Caterpillar has been the subject and object, if you will, of congressional love. Congressional insiders, both Senate, House, on both sides of the aisle, okay, have significant investments. And again, this was a long time ago, but have made significant investments in Caterpillar. And again, I'm not saying that to be political. That's fact, and it's been on both sides of the aisle. So there have been significant investments made in Caterpillar. but it's a while ago. So, but their purchase of this has been very meager. In terms of overall like size, I mean, come on, almost every major fund would own Caterpillar because obviously a constituent of the S&P 500. It's almost a $200 billion company at this point. Just to give you an idea, Caterpillar, it's a similar size to some of the bigger companies out there, like a Netflix and so forth. But it's trading. It looks almost like a tech stock in here. It's crazy. When you look at stuff like Caterpillar and or Walmart, you really have to worry. And this, what keeps you up at night? Look, Caterpillar and Walmart. Okay, you think this is like a tech stock? No. Okay, this is like old school, like a 50-year-old idea of like what a blue chip is. That's Caterpillar. Same thing with Walmart. It's like what a blue chip is. And when you see like blue chip, I know nobody's used that term in like 30 years, other than maybe Jeff Bierman, who is 105 years old. Anyway. If you take a quick glance at Caterpillar, that move, okay, just to quantify what that move happens to be, let's go from absolute low to where we're presently trading. It's almost 70% move to the upside. That's the kind of crap that you see, again, out of a tech stock, not out of a quote unquote blue chip over there. So with that, there are lots of correlations in here to the S&P 500. But, okay, when I make a comment like nobody has to buy the stock, you can get option buying that actually drives the stock higher. Okay, that option buying can continually and perpetually drive stock higher too, even if there's no volume necessarily on an intraday basis. So again, it's part of this whole squeeze thing. It's pretty chaotic world you're living in right now. By the way, look, Meta continues to come off. Nvidia and Meta, there is something wrong in these two products. Okay. It's again one of the objects of my affection for today. So I'll look for a Caterpillar opportunity in the days to come. I may jump into this before even the CPI comes out. I don't care if we rally, CPI rallies, because if I sell puts and we rally, it'll actually help, and then Caterpillar could fall afterwards. So in something like a catapult, don't let the CPI intimidate you. In something like an in-out spread, the CPI number coming out tomorrow should, in fact, intimidate you. Anyway, Meta, Nvidia, okay, I'll come back to this. You are seeing some real selling going on, as I said, inside of Nvidia. It's dragging Meta with it. And if that's true, as I said, AVGO, which of course is Broadcom, should also start to see some sell side activity. It is not following suit yet. This could actually be opportunistic, but there is no size whatsoever. Broadcom is dead in terms of size. This is untradeable, in my opinion, totally untradeable. Broadcom, look at this, dollar-wide markets in here. No one's trading it. Dead, dead, dead. So that's unfortunate, but this could see some more slippage as well as that's been trading. One other thing I wanted to point out, I saw this actually hit the PR wire this morning, which was Tilray. For those of you who don't know, this is it's another marijuana stock. And the reason I wanted to bring it up is because there's so much conjecture right now around AI. There's a ton of conjecture around AI. Let's not make this a monthly watch. Let's go back 5 years. Let's go back a little further in here. There's so much conjecture around AI. Okay. And I'm about to say AI versus, marijuana. It has nothing to do with one product versus the other. It has everything to do, though, with what hype is. And if you're not comfortable with Tilray, look at something like MJ, which is the marijuana ETF. Okay. Some of the highest hopes of any product, okay, to come out in recent history, you could attribute to the legalization of marijuana. You know how many people were like invested in this? This is crazy. Okay. This was some of the biggest hype. I don't know if the AI side of its hype, okay, if it's going to be real. I can tell you one thing, okay, marijuana is real, okay, and it's gotten absolutely annihilated. I didn't think I'd ever see the ETF down to $4, but it's at $4. And Tilray is, most of these companies are hanging on by a thread. You know what I like what Dimitri said too. At the same time this was going on, he's right. Okay, it was Beyond Meat. Okay, Beyond Meat, it's the exact same thing. I do draw parallels in terms of the price action. I absolutely draw parallels. I don't give a damn what people think about AI. Okay. What do you think about meat? Everybody needs meat. Everybody wants to go beyond meat until you find out that it's giant pink goo, right? It's all fun and games until it's giant pink goo. Anyway, again, I don't want to draw anything other than price action parallels between those, and it is worth noting on that. Anyway, with that being said, as I was telling you guys, I'm not jumping in front of a lot of price action this morning. The only feel I had is out of the gate. As I said, I think the marketplace might pull back a little bit, but I don't. And the pullback happened, but that's it. That's all I have right now. Okay, I see some more sell side activity hitting Nvidia. It's getting real in there. It's real and it's spectacular. I am shocked at this point. The Nasdaq is been able to hold it together. I would assume the Nasdaq would have seen the dark side, and very well is seeing the dark side over here. By the way, I'm carrying positions in both of these, so that crap's helping me. I would love to see Meta die because I have a bunch of different positions on Meta, including some short stock, but I'm also in catapults inside of Meta. So watch Meta, watch Nvidia. Okay. Throughout the course of the day, though, the interesting player in the room, the bonds are a little bit higher today. Okay, but so is volatility, and volatility has picked up quite considerably in just the last couple of seconds. You're starting to see volatility break through. We could see some real selling. Last look over here before I turn it over to the professor. Again, I'm less than enthusiastic on a trading session like this, but one of the last looks. Keep watching. Okay, trade at the ask or above. It is starting to pick up inside of Nvidia, but it's by no means the same kind of chaos that you're seeing inside of Tesla, the upside. Okay, put buying can drive stocks down. Call buying clearly has driven stocks higher. Okay, look at Tesla. Call buying drives stocks considerably higher. Even Tesla starting to come off a little bit. My oh my, how fast that marketplace can change, though. Some sell side in the last couple of moments done on some huge by huge volume over here. Sorry, I'm looking right now. I think this has got to be some news coming out, PR wire. That volume is massive. There's definitely news out. What it is, beyond me, but it doesn't make a difference either. One of the things I often say is knowing that it's news, I think is important. Knowing what the news is, okay, doesn't make a difference. Some of the price action over here, you're getting contract size that is huge right now, 12, 13,000 contracts a minute. That's real sell side activity that's starting to bleed into this marketplace. So let me stay with you here for just a moment as this kind of plays out. This is, again, not only a significant move, look what's going on right now inside of Nvidia, okay? I suggest this might be a little bit maybe of a short-term bottom in here, specific to Nvidia. So Nvidia is now hitting a 3%, and with it hitting 3%, we crossed through the 850 level. Take a look at the auto expected moves. You're on it right now. You're on the lower edge of expected move. So things are getting a lot more interesting in this marketplace. The Nasdaq, though, is still holding it together. It's basically unchanged on the trading session. So again, hold all your thoughts. The volatility, it's getting a lot more serious right now. Okay, whatever's going on is much bigger, okay, than we anticipated. I mean, where's oil right now? This could even be some. It's not geopolitical risk. It is not geopolitical risk. The financials, though, are getting tagged too. Okay, there's no Fed speak today either. So you got a couple things going at you here. This is definitely some big news, though, coming out. So wild sell side starting to hit this this marketplace in the last couple of seconds here. That's some of the biggest volume that we've seen during the trading session in weeks. Okay, absolutely in weeks, the largest size that we've actually seen. We're going to clear do over 25,000 plus contracts here this minute. Absolutely huge size coming in. Sorry, just over 20,000 contracts just traded that last minute. So I'm going to tentatively turn it over to the professor. I am going to turn it over to Jeff Bierman. I was waiting for the first uptick in here. And it's funny because not much has worried this marketplace. By the way, this is the daily expected move. Right now, we're on it. We're on the daily expected move. inside of the S&Ps. We have bond movement that looks defensive in nature too. Bonds are actually bidding up. So yeah, I guess we'll sit tight and see what plays in this marketplace. But be a little careful right now. Again, very significant moves, very, very quickly in a number of products. This is not anything in particular. Okay, we saw some sell side across the board over here. It looks like it's finally starting to mellow out, in which case I will turn it over to Jeff Bierman. So Jeff's coming on momentarily, talking about a chronology. I can't get that one out. When you have enough coffee in you, okay, and it's still a little bit early, okay. The word chronology of Wall Street Commerce Regulations Part 3. Okay, I am going to be chatting in down below. So for those of you that are actually stay tuned in here, stay in the chat room. Damn, I may have missed that Caterpillar trade. Son of I wanted that trade. Okay, I could have been somebody. You know what though? I don't mind selling puts in a down day either. So I have positions on. My positions are maturing nicely. Okay. However, okay, we'll see how today goes. Well, let's kind of play it by ear over here. The S&P is getting smoked a little bit. Things have mellowed out. Stay tuned. Jeff Bierman's coming on right now.